Welcome back to the Deep Dive. We cut through the noise, get you the key insights, and, well, make you informed fast. Today we're digging into Bill Holdings, Inc., their latest earnings call Q4 and the full fiscal year 2025. Solid performance. But maybe more interesting is their outlook for FY26. What's it telling us about where financial operations for SMBs are headed? It's quite a story.
Yeah, it really felt like a pivotal year for Bill. You saw these big strategic bets, especially this really strong focus on AI. It feels like they're trying to change the game.
Definitely.
So we're going to unpack all that, look at the numbers, of course, and figure out why the reaction seems to be, let's say, cautiously bullish among investors. The goal here for you listening is just to give you that distilled knowledge, help you really grasp Bill's path forward and maybe what it means for fintech overall.
Okay, let's kick things off with those headline numbers. Q4 FY25, they definitely caught my eye. Non-GAAP EPS came in at 53 cents. And, non-GAAP, that's adjusted earnings, gives a clearer view of ongoing operations.
Right, strips out some of the noise.
Exactly. And that 53 cents, it crushed the consensus estimate of 41 cents. That's like a 29% beat. Pretty huge.
Huge beat, yeah.
Yeah. And revenue, too, $383.3 million. Also beat the consensus, which was around $376.5 million, so 1.8% there, and 12% growth year over year. Strong top line.
Absolutely strong. And if you look underneath that, the core health seems really solid too. Core revenue, that's their subscription and transaction fees, the really sticky stuff that grew 15% year over year, came in at $345.9 million.
15%? Nice.
Yeah, and their non-GAAP gross margin, still incredibly strong, 84.2%. That really says something about their efficiency, their model.
Scalable.
Very scalable. And free cash flow was healthy, $68.5 million just in Q4. And get this, $312.5 million for the whole fiscal year.
Wow.
So, the market reacted. Shares popped about 4% after hours. Seems like confidence in the strategy, even though, as we'll get into, the guidance was maybe a bit cautious.
Right. It wasn't just a beat. It feels like they were making a statement about that foundation.
Exactly.
Okay, you mentioned FY25 being pivotal. The numbers back that up. But beyond hitting targets, what was the big strategic shift? What really sets the stage now, especially with that cautious outlook? What made it pivotal?
That's really the core question, isn't it? Because, yeah, the numbers are good, but the story is in the strategy. CEO René Lessard, he kept highlighting execution on innovation, profitability expansion, and these strategic investments for the long haul.
Okay.
So think platform strengthening, scaling up, going after bigger, more complex businesses, not just the small guys anymore. And the big one, laying the groundwork for these financial operations agents for SMBs.
Right. The AI agents.
Exactly. It's all part of their mission for the Fortune 5 million, those SMBs driving the economy. So the key takeaway isn't just optimizing. It feels like they're genuinely trying to reimagine this whole market space.
And that perfectly tees up AI. It was everywhere in the call. Mm-hmm. It's obviously core to the strategy now. So how are they actually using AI right now, beyond the buzzwords? And what's next that we should really be watching?
Yeah, and they were pretty clear they've made real, tangible investments here. It's not just talk. They've built what they call an agentic AI platform.
Agentic. Yeah.
Meaning the AI isn't just helping you do tasks. It's designed to sort of make decisions, take actions autonomously, like an intelligent financial agent for the business.
Okay, proactive.
Exactly. And they're leveraging like 2 decades of their own data. Millions of SMBs, over $1 trillion in spend. That's a huge data advantage.
Lots of moat.
For sure. And in FY25, they said over 40,000 customers were already using 2 or more AI features. Their virtual assistant processed almost 500 million documents. That alone increased fully automated bills by 80%.
Wow, 80% increase.
Yeah. And it wasn't just automation. AI helped flag customers for credit limit increases. They extended $200 million proactively based on that and stopped over 8 million fraud attempts. Real bottom line stuff.
That's impressive, tangible impact.
Oh.
Okay, you also mentioned this shift from do it with you to do it for you. What does that actually mean for a customer? It sounds pretty radical. Are there risks?
Well, connecting it back to that bigger vision, do it for you, means literally trying to eliminate entire workflows.
Eliminate them.
Yeah. Think about a small business owner not having to manually key in invoices or chase approvals or even schedule payments. The AI agent just handles it end to end. Autonomous finance for SMBs.
Okay, that's a big promise.
It is. They plan to start rolling these agents out in Q2 of fiscal 26. And they expect most customers will use at least one agent by the end of FY26 for things like intake, supplier management, payments. The challenge, well, obviously trust, accuracy. But they seem confident their data gives them an edge in reliability. If it works, it could totally change how SMBs operate, free them up significantly.
Okay, sounds transformative. But from the business side, how do they make money off this huge AI investment? Because, it costs money to build.
Right, good question. Long-term value. The CFO, Rohini Jain, she laid out this pretty thoughtful 3-phase plan. First phase, just drive adoption, get SMBs using it, prove the value.
Okay, focus on usage first.
Exactly. Second phase, introduce differentiated subscription pricing specifically for these AI features. And then third, longer term, monetize the really sophisticated agents, maybe on a per transaction basis.
Interesting. So value first, then monetize.
Yeah, it feels like a long game. Get it embedded, make it indispensable, then layer on the premium pricing. It's maybe smarter than just charging up front, which can sometimes kill adoption,
Makes sense. Okay, moving beyond AI for a second. The build network itself, still a huge asset, right? A moat. What's new there? How are they leveraging it?
Oh, yeah. The network's still growing strong. It passed 8 million members now. That's up 18% year over year.
8 million.
Yeah, and that size just makes everything better, faster, more secure, more efficient payments. They said 54% of payments now happen right within the network. Seamless. And they launched a new product too, Supplier Payments Plus. It used to be called Advanced AC.
Okay, what does that do?
It basically streamlines reconciliation for the big suppliers who are collecting payments from all the SMBs on bill. And here's the interesting part. They monetize it with an ad valorem fee paid by the supplier.
Ad valorem. So based on the transaction value.
Exactly. Not a flat fee. It shifts the model. Aligns bill more with the value they provide to those larger suppliers. Could open up new revenue streams there.
Okay, so deepening engagement within the network. But what about finding new customers? Are they just focused inward or looking outwards too?
Definitely looking outwards. They're strategically expanding their market, especially targeting mid-market companies.
Oh, moving up market.
Yeah, and mid-market customer growth actually outpaced their overall APR customer growth by 5 points last year. And these customers are attractive, right? Typically twice the payment volume, twice the users. High-value segment.
Makes sense.
Plus, they're pushing hard on this Embed 2.0 strategy. They signed a big deal with a Fortune 500 software company, another partnership reaching hundreds of thousands of SMBs. So Bill's tools get integrated right into other platforms. It's not just direct sales anymore. It's a much broader reach.
Got it. Multi-pronged approach. Okay, besides the big strategy stuff in AI, let's quickly touch on operations and leadership. Any key metrics jump out? Who's running the show now?
Operationally, yeah. Total payment volume TPV hit $86 billion. That's up 13% year over year. And they processed 33 million transactions, up 18%. So solid, steady growth in the core engine.
Okay, good volume growth.
And leadership. They've really shored up the executive team. Rohini Jain is the new CFO. John Raddick is president and COO. That's a key operational role. And Michael Cherry joined as EVP GM of Software Solutions. Feels like a really robust team now, aligned to execute on these big plans. Ready to scale.
Okay, strong team in place. Finally, capital allocation. They made some notable moves there. This is the approach. Sounds like confidence.
Definitely signals confidence. They bought back $100 million worth of stock in Q4 and July, and the board just approved a new $300 million share repurchase plan for fiscal 26.
Oh, 100 million. Okay.
Yeah, that's not small change. It really signals management believes the stock is valuable. The idea is to, absorb some market bumps, support the EPS, especially since float revenue might be a bit weaker with lower interest rates. It's about returning value and showing belief in the long run.
Right. Okay. Putting it all together, strong results, this big AI vision, the buybacks. Let's look ahead. The guidance for Q1 and FY26. What does it actually tell us, given that cautiously bullish label we talked about?
Okay, so for Q1 FY26, revenue expected between $385 and $395 million. Non-GAAP EPS between 0.49 cents and 0.52 cents for the full year FY26. Total revenue projected between, let's call it $1.59 billion and $1.63 billion. That's 9 to 11% growth year over year.
9 to 11%. Okay.
Core revenue, they see growing 12 to 15%. And non-GAAP EPS between $2 and $2.20. So still solid growth numbers. But yeah, compared to maybe past hypergrowth, some analysts felt it was a bit measured. Hence that cautiously bullish feel. It's not setting the world on fire, but it's healthy given the environment.
And what's driving that caution? What specific factors did they mention, especially on the macro front?
Yeah.
Seems like realistic planning.
Exactly. Prudent is the word they use. They're assuming flat volume per customer year over year, just holding steady.
Flat volume, okay.
Yeah, citing external uncertainty. They even specifically mentioned potential tariff impacts hitting SMB discretionary spending. And the other big one, lower interest rates hitting float revenue. Remember, that's the interest they earn on customer funds held temporarily.
Right, the float.
Lower rates mean less income there. They figure it'll impact total revenue by about 1.6 percentage points for the year. And while bill AP take rates should expand similarly, the spend and expense take rates are expected at the lower end of the range they previously gave, around 250, 260 basis points. That's partly portfolio mix, partly less discretionary spend, like on ads, very specific headwinds they're baking in.
Okay, very clear headwinds.
Yeah.
But it can't all be caution, right? Any silver linings, things expected to accelerate later in the fiscal year.
Oh, for sure. The picture isn't just static gloom. They actually expect growth to improve in the second half of FY26.
Ah, okay. Why?
Well, partly because those big strategic initiatives, the AI, the network stuff, should start delivering more results by then. And also, they'll fully lap the impact of that big online ad platform changing its payment policy. That's been a drag, but it'll be out of the year-over-year comparison.
Got it. So some of the current softness is maybe temporary or specific.
Yeah, that seems to be the implication, not necessarily a fundamental problem with the strategy itself.
That's important. So for anyone tracking Bill, what are the key things to watch now? The catalysts, the signals?
Okay, few key things. Definitely watch the AI product uptake. Are customers adopting those agents, and how are those embedded partnerships going? That's core to the growth story.
Right, adoption and partnerships.
Second, keep an eye on the buyback. Any updates on the pace of that $300 million program shows continued management confidence. Third, operating margin expansion. Can they beat their guidance there? That'd be a strong signal. And then, obviously, the macro stuff, interest rates, general SMB health, that's always a factor. And of course, the very next earnings report, Q1 FY26 results. That'll be the first real test of this outlook.
Okay, perfect. That brings us to our not financial advice segment. Time to put on the imaginary hedge fund hats, pitch some, let's say, bold, but maybe plausible trade ideas for the committee, just for fun, of course.
All right, let's brainstorm. Given the strong print, the market reaction, and especially this big AI and embedded finance strategy, I've got a couple of thought experiments for the committee.
Lay them on us.
First idea, a pair trade. Long bill, short the legacy FinOps integrators.
Okay, explain the thinking.
Well, Bill's agentic AI aiming to eliminate workflows, this do-it-for-you thing, that's a potential game changer for SMBs. If it works, it directly attacks the value proposition of those older software providers who make money off complex setups, integrations, professional services, the ones built around humans doing the work.
Right, the manual integration players.
Exactly. If Bill delivers truly autonomous finance, those guys could face a serious squeeze. So, the hypothetical trade. Go long bill on the potential leap in efficiency and network effects, and short the legacy players who might get disrupted. The theory is the market hasn't fully priced in this specific AI disruption angle for the older companies yet.
Interesting angle. Okay, what's number two?
Second pitch, a bit more complex. A long straddle on bill funded by a short strangle on 3-month T-bill futures.
Whoa, okay, break that down. Macro volatility play.
Exactly, high conviction volatility. Management's guidance was prudent, right? Citing uncertainty, tariffs. That implies things could swing significantly either way, better than expected or worse.
Right. Potential for a big move.
So the long straddle, buying both a call and a put option on Bill at the same price, lets you potentially profit from a big move up or down. You're betting on volatility itself. Now, how to potentially pay for it? They specifically called out lower short-term rates hurting float revenue.
The interest rate sensitivity.
Right. So if the Fed does something unexpected with rates cuts more, hikes more, that float revenue number could surprise, impacting earnings. By shorting the strangle on T-bill futures that's selling both an out-of-the-money call and put on short-term rate futures, you're essentially betting that short-term rates won't make a huge move, that they'll stay in a relatively tight range. If rates stay stable, you collect premium from selling that strangle, which helps offset the cost of buying the straddle on Bill stock. So you profit if Bill makes a big move, up or down, funded by a bet that short-term rates remain relatively stable. It's a play on Bill's specific uncertainty and broader rate stability.
Clever. A hedge within a speculative play.
Yeah.
Very hedge fundy.
Purely theoretical, of course.
Of course. Okay, let's wrap this up. In summary, Bill Holdings finished FY25 strong. Good growth, better profits, and this really ambitious vision focused on AI and their network. Felt like a year where they really set the stage.
Yeah, truly pivotal. And that new buyback program, it screams management confidence, even while they're being realistic about the near-term macro picture. So yeah, we're left feeling cautiously bullish. You balance that great Q4 and the exciting future potential against the more measured FY26 guidance and those real economic headwinds. It's a compelling story, but definitely one that needs watching closely.
Absolutely.
Yeah.
And just the usual reminder, everything we talked about today, informational purposes only. It is definitely not financial advice. Please talk to a qualified financial professional before making any investment decisions.
Couldn't agree more. Thanks for joining us for this deep dive. We really hope you'll think about Bill's unique spot in SMB finance and this whole agentic AI future. Consider how that shift, do it for you instead of do it with you, could ripple out. What might it mean for competitors down the line? Something to chew on.
Great final thought. From everyone here at The Deep Dive, thanks for listening. We appreciate the insights, and we'll catch you next time.